welcome to the Finance Auditing Committee meeting of Thursday, January 27th, 2022. Amaret confirms that we're a committee of the whole and we do have a quorum. It is 10:05 a.m. and I'd like to call this meeting to order. And can we have Madam Secretary, can you please call the roll?
Thank you. Starting with Director Cochran.
Here.
Director Giudice. Absent. Director Grosboll.
Here.
Thank you. Director Hernandez.
Here.
Director Mastin.
Here.
Vice Chair Parr.
Present.
Chair Rabbit.
Here.
And President Tirio.
Here.
Thank you. That confirms your committee members. And as I mentioned, you will have a quorum, and your committee of the whole includes Directors Garbarino, Hill, Rodoni, and Snyder. I'm going to go and confirm staff. Dennis?
Here.
Joe Wire?
Yes.
Eva Barr-Furbush, are you still on the line? Didn't think I saw her. Madeline Chen?
Here.
Thank you. Dave Rivera?
Present.
Mona Babauta?
Present.
Jim Swindler?
Present.
And Kelly Hopper?
Present.
Thank you. That confirms staff on the line.
Great. It's great to have everyone with us, and thank you. I want to remind everyone to mute their phones until after staff's presentations, and remember to unmute when we open it up for discussion. And after staff's presentation, I'll be asking for any questions, comments, and/or concerns on the item. And if there are any, the Secretary or I will call on you accordingly. And after the discussion, we ask for any public comment before moving on. Obviously, follow along by referring to the page number located on the bottom right corner of your meeting packet. And Madam Secretary, can you please introduce that first item?
Thank you. We're going to start with item number 3, and that's ratification of previous actions by the Auditor Controller. That packet of commitments, ratification, and investments is before you and begins on page 5. Ms. Murphy is still on leave this month, and we anticipate her return in February to once again provide her report to the committee. In the meantime, Joe Wire is on the line and available to answer any questions you might have concerning this report.
Great. We look forward to Ms. Murphy coming back from maternity leave. But Joe, are there any questions or comments for Mr. Wire on item number 3? Madam Secretary, have you heard from any board members who have any questions on this particular item?
I do not have any board members with questions, and I do not have any members of the public wishing to speak on this item.
Okay, great. Thank you very much. Then I'll ask my colleagues for a motion on item 3 to ratify the previous investments, authorize investments, and accept the investment report.
Mr. Chair, Director Cochran, I'll move that item.
And a second by? Great,
Got it.
thank you very much. Madam Secretary, can you please do a roll call vote?
Thank you. We're voting on item number 3 with a first and second. So we're going to start with Director Arnold. Absent. Director Conroy. Absent. Director Garbarino.
Aye.
Director Giudice. Is absent. Director Grosboll.
Aye.
Director Hernandez.
Aye.
Director Mastin.
Aye.
Director Milgar. Is absent. Director Parr.
Aye.
Director Rabbit.
Aye.
Director Rodoni.
Aye.
Director Snyder.
Aye.
Director Stephanie. Is absent. Second Vice President Hill.
Aye.
First Vice President Cochran.
Yes.
And President Tirio.
Yes.
Thank you. That's 11 ayes.
Great, and thank you all. That motion passes. So we'll continue on to item number 6, since there are no actions under items 4 or 5 today. Agenda item 6 is to approve actions relative to the award of a sole source contract. That's 2021-D-70 to GenFair GFI software system upgrade. The staff report begins on page 27, and the Administration and Development Manager, Kelly Hopper, is on the line to present this report. Kelly, go ahead.
Thank you, Chair Rabbit and members of the committee. As you mentioned, we are looking for approval of actions relative to our sole source agreement with our GFI Farebox through GenFair GFI. In essence, it's 3 items. One is to approve the sole source contract for the implementation of the software and hardware upgrade, which I'll mention briefly here in a moment what that entails. Also to approve a budget increase on the capital budget relative to this program. And then finally to authorize the general manager or his designee to approve additional amendments related to future reoccurring maintenance or support involving these systems. Just as a refresher, is the district currently has the Odyssey fare box, the GFI fare boxes by GenFair, installed in all of our Golden Gate Transit buses. This is our reporting of ridership as well as our collection and accounting of data or revenues that are associated with the transit fares. The system that we currently have on our GFI fare boxes was installed in 2010, and we've been notified by the vendor that they're no longer going to support that version. And so we need to look at upgrading our existing software and any of the hardware that's inadequate for the upgrade. So Bus Division, as well as Information Systems and Accounting, looked at what the possible solutions were and determined that an upgrade is recommended to the existing system, to the latest software version, as well as replacing some aging data probes and computers in our garages that collect this data. I think it's important to note that this does not include a replacement of our existing hardware fare boxes on board our bus. This is just a software upgrade. And then just as one additional thing I wanted to point out that was in the staff report, we have that interface that allows us to connect the data that's gathered on board our GFI GenFair fare boxes into the district's Transtat program, which was part of the justification for the sole source contract. I'm available to answer any questions you may have. Thank you.
Great, thank you very much, Kelly. I'm just curious. So all along, is this kind of like what we're used to with cell phones? There's continually upgrades to a point where then the actual, I mean, it's been 12 years, so it's probably not surprising that the system needs to be significantly upgraded at this point in time. But have there been interim upgrades along the way?
Chair Rabbit, there currently has not been any updates since 2010, but you are dead on in that it's very similar to our cell phone or other technologies where at some point the vendor will no longer support aging versions, which would require either complete replacement or some sort of upgrade.
Okay, I appreciate that. Thank you very much. And does anyone have any questions for Kelly on this particular item?
Director Hill.
Go ahead, Bert.
Kelly, with this going in now, I know or I believe there are going to be a lot of advances in fare paying over the next 5 to 10 years. Do you have anticipation of what that's going to be running through the system included in here, or will we expect a number of amendments over the next few years?
Thank you, Director Hill. We are working towards that, and really, I think what is going to take a leading step in our region is the upgrade of the Clipper system as we move into Clipper 2.0. I think it will help us, it will help guide us as we move forward. What does that next generation look like? So in essence, what we're trying to do is keep these systems limping along until we know what that Clipper 2.0 world looks like and what, if any, additional or new systems that would need to be placed onto our vehicles or our fleet.
Thank you, Kelly. Anyone else have any questions for Kelly? I'm not hearing any. I'll look to Madam Secretary. Is there anyone from the public wishing to speak on this particular item?
We have no speakers for this item.
So I will look to my colleague to get a motion to approve item number 6 on the sole source contract. The item Kelly described, sole source contract increase and to authorize the general manager in the future years. Is there a motion to approve?
Parr, so moved.
And a second
Director
by?
Cochran. Director Cochran will second it.
Great. And if we could have a roll call on this.
Thank you. We're voting on item number 6 with a first from Director Parr and a second from Director Cochran, starting with Director Arnold. Who's absent? Director Conroy. Also absent. Director Garbarino.
Aye.
Director Giudice. Is absent. Director Grosbol.
Aye.
Director Hernandez.
Aye.
Director Maston.
Aye.
Director Melgar. Absent. Director Parr.
Aye.
Director Rabbit.
Aye.
Director Rodoni.
Aye.
Director Snyder.
Aye.
Director Stephanie. Is absent. Second Vice President Hill.
Yes.
First Vice President Cochran.
Yes.
And President Tirio.
Yes.
Thank you. You have 11 ayes.
Great, thank you. That motion passes. We'll move on then to agenda item number 7. It's regarding toll penalties process. The staff report starts on page 31, and the purpose of this report is to discuss the district's toll penalty structure and the impact of toll penalties. We're looking forward to the discussion. Before I start, I just want to say, as someone who's been serving on MTC and the Bay Area Toll Authority, we've been taking this up of late. I will say that from my understanding of what the bridge, our district practices are versus what the Bay Area Toll Authority practices are, that we seem to be very much more flexible in terms of addressing folks who have significant issues. At the same time, I think it's important to understand, obviously, we all do, kind of the business model behind what we serve, and the importance of collecting those tolls going forward, but having a fair and equitable process to go forward. So with that, I am going to turn it over to Joe Wire. Joe?
Thank you very much to the chair and to the committee. And as just discussed with you, it is not your typical board item where we've got something in front of you or looking for your consideration and approval. This is definitely looking to give you some information and then to have a discussion about a direction going forward. And if at the end there is direction to the staff, either at this meeting or at a future meeting, then we'll carry that out. So to start with, the discussion came out, as I think the chair just mentioned, that there has been a lot of talk in the community and reports have been written recently. And the board took an action a year and a half ago to, in resolution 2020-49 to denounce racism and look for firm racial justice and equity. And all of those had got us thinking about different parts of our business model. And tolling, of course, is central to our entire business model, provides the support for everything we do. And to look at how that we might look at that in light of what's going on and also in the resolution. And in doing so, we came to consideration to look at the penalty structure. And before we get into start talking about what staff kind of put on the table for discussion, I would like to give a little background on existing tolling and penalty structure quickly. The report does cover it, and then we'll just talk a little about options that the district is considering to meet these concerns. Okay, so in the report, it starts out with looking at the background of the tolling program. And since 2013, so for the last 9 years, the district has run an all electronic tolling program. That means all customers pay electronically. And I don't use the word customers lightly. Everyone who crosses the bridge is a customer, and that is a change from what it used to be prior to electronic tolling, where you had all electronic tolling, where you had customers and then you had violators and people who just didn't pay. In our case, there are none. Everyone is a customer, and there's just different ways to pay. So, for example, you can be a member of the Fast Track program, which is doesn't have a transponder. You can be in the pay-as-you-go account holder, so in other words, you literally pay each time you cross, or you can receive an invoice from the district, and those invoices can be paid through a variety of different ways, through the web, the phone, mail, at a cash payment location that are spread around the Bay Area. So a number of different ways to pay. And then there are no fees or penalties associated with any of these options, although these options do have a different toll rate in our structure. There are 3 toll rates, one for fast track, one for the pay-as-you-go, and one for the invoice. And those under the district's 5-year tolling program have been inflation inched up slightly every year. Presently, they're $805, $860, and $905, depending on the choice of our customers. Penalties occur if there's a late payment. In other words, if a certain amount of time has passed, and it varies a little bit based on your choice of payment, but a certain amount of time has passed and there's been no payment, then the district, through its contractor, sends out a violation notice. That violation notice contains the toll and a $25 penalty. If that's not paid after 45 days, a second violation notice is sent out, and it contains another additional $45 penalty. However, if that second violation is paid within 15 days, it reverts back to the original $25 penalty. And this process is followed for every toll transaction that occurs on the bridge. Now, from the very beginning of electronic tolling, the district set up programs in recognition that sometimes things happen. And in our philosophy has always been, we're in the toll collection business, not the penalty collection business. The penalties are there to make sure that we do collect the tolls. So these 2 primary sources of flexibility were put into the program from the very beginning. One was a first-time waiver program. And that's an example of a customer came to the district after crossing the bridge, or 1 time, or 50 times, or 100 times, and said, I didn't realize this was going on, and we would waive their penalties. We would offer them an opportunity to join Fast Track. We would do a number of different things to try to get that customer into a situation where this wouldn't occur again, but it came with a toll penalty waiver. That started out as a first-time waiver program, and over the years it has expanded. We've had some repeat customers. We also have a program, we implemented a program for those that didn't qualify anymore for the toll waiver program, an opportunity to reduce their tolls. So if customers approach us with a series of tolls or a number of tolls that have gone into violation status, that we would reduce those violation amounts from whatever they might have been down to usually around $10, approximately $10 a toll violation. If there's an enormous number, sometimes less. And that is always the intent of getting the toll dollars, and then the penalties are in addition to that. But the goal has always been to collect tolls from every customer. And a reminder of the importance of why that is, as I mentioned in the very beginning, it's the primary funding for the bridge operations. It is essential funding for seed funding and our contribution for all the bridge capital projects that we do, and capital projects in the bus and ferry system. It is the core subsidy of the bus and ferry system. Tolling is. Bridges get structured quite differently than other transit agencies. Many rely on a different type of local source, often either sales or property tax, but the district's transit, both bus and ferry system, rely on the tolls as their subsidy. And another central philosophy the district had since all electronic tolling was that considered that the penalty funds that were collected would make up for the few customers that the district is not able to collect from. And that has borne out over the last 9 years. And that is essentially the philosophy that if you're paying your tolls on time and your customer in good standing, that we don't want you to bear the burden of us not being able to collect from some, and that burden fell on and was paid through these penalty structure. And that's occurred. So, having looked at those, kind of get a little background with the toll and toll penalty structure, we were looking at options, as I mentioned, that would support the resolution and that would, maintain secure funding for the bridge and the transit system, but not add substantial financial burden to customers who can't or don't pay on time, especially those that are economically disadvantaged, or those that for some reason or another end up with a large amount of toll violations, and therefore the resulting penalties. So we came up with 2 basic concepts, and looking to discuss them with the board and interest on the board's interest on exploring them. The first concept is pretty simple, and it does exist elsewhere in our society already. And these are adjudication. This should be an adjudication process for those that qualify as economically disadvantaged. And I know that's a concept that can have a lot of different paths, but the district's, I think, staff's interest would be in collaborating with a fellow or another local entity or agency that already runs a similar process and that their customers are already going through, that we could cooperate with and collaborate with someone like that, an agency of such, and have them adjudicate these and essentially waive violation penalties for anyone who would qualify. That would essentially relieve at least a large substantial of our customers who have an economic disadvantage from having toll penalties make it difficult for them to come forward and to just meet their obligation in paying the tolls. So that's one concept that we'd like to put forward and we can discuss. And a second concept would be for the situations that seem to come up for a whole variety of reasons that we've come across in the last 9 years, where we in the past have our program where we've reduced the toll penalty down to $10 in order to allow someone to be able to pay them, and sometimes even less than $10, and allow them to pay off those toll penalties and tolls and clean up their record. To make that simpler, the idea would be coming up with sort of a tiered cap. What I mean by tiered is if, for example, if a customer had up to 10 violations and they came forward and was wanting to clear those up, we could agree on some cap that we'd set forward early on, say at $100. And so if you had 1 to 10, you would pay $100 and that would clear up the record, and then you would pay your addition to your the toll price itself. And the reason to be tiered is that, of course, sometimes we have customers that have 20, 50, 100, 150 violations. And so we would put in, the concept is to put in several tiers, maybe one at 50 violations or 40 violations, then one at, say, 75 violations. Anything above that would be capped at, $250 or $500 or $750 at some point that, encourages customers to come forward to clear their record, but doesn't discourage them to come forward to clear their record. And therefore that we would receive the tolls, the outstanding tolls, along with some penalty amount. The idea of a tiered cap system is it would be easier to understand, quicker to adjudicate than the current process that we have, although we could keep the current process. We've done some looking at the fiscal impact. Obviously, it is important that we keep an eye on that. All toll and penalty revenues used to subsidize the district's current bridge and transit operations. And looking at structuring programs like the two we just talked about, we don't have an exact, of course, figure on what the economic impact would be, but it looks like to be in the $2 to $4 million range. Presently, the district brings in approximately $10 to $11 million a year in penalty revenue. So that'd be reducing that for somewhere from 20 to 40%, depending on the ultimate structure of the programs. And then, of course, customers' use of the programs, not something that the district controls. And in light of the district were to follow in one of these footsteps and did implement a program that did reduce revenues, of course, those revenues will either have to be made up some other way, or inevitably, it's generally that they would, we'd be reducing our operating expenses, which generally is reducing transit operating expenses, because the current structure of the board's philosophy is to fund, the bridge, and then with monies available, we end up funding the transit system. So with that, that's a quick summary of the board item, and I would love to open the floor to take any questions on what I've talked about or any comments on the topic as a whole.
Thanks so much, Joe. I really do appreciate that. And I think it's a timely discussion, like you said, because of what's going on elsewhere and board's own emphasis equity issues. So with that, I'll look to my colleagues, see if there's anyone who would like to chat about what Joe just mentioned, and or offer any suggestions going forward.
This is Director Hill.
And this is Director Groswell.
Okay, I think I heard Director Hill first, and I'll look to maybe Madam Secretary to guide us through the discussion, as she has a better ear than I.
Okay, we'll do. And you're right, Director Hill, I heard you, and then I heard Director Grosbo following that. So we'll start with Director Hill.
Yeah, I just can't. As you probably know, I don't drive very often. We cross the bridge in a car maybe a couple, 3 times a year. And inevitably, I suddenly realize on coming back from typically San Rafael that I don't have my fast track. And by now, I think my old fast track has a dead battery anyway. And in the most recent time, I went over and I said to Lorna, I didn't get that fast track, and we're going to get a bill. And we were talking about it, and no bill ever came. And I said, how in the heck is that, going on? And then I realized that they must have had a system built in that does it automatically. So I don't even need to bring a fast track period or deal with it anyway. And as I said, we rarely even use a car. So I just want to thank you. That's a piece of genius, and it's absolutely wonderful to be able to still be able to get around, not have to remember a bunch of stuff we don't usually use. So thank you very much, Joe. I was so impressed.
Well, I just want to add that you as a customer have done the most important thing, and that is to put your license plate number on your account. Once you do, once a customer does that, we can provide much better and more excellent customer service. If you had not put your license plate number onto your account, then we would have sent you a violation notice, and then you would have called, of course, and we would have cleared it up by matching that violation to your account. And then we would have asked you, could you please put your license plate on your account so we can take care of this automatically in the future? So we're doing that. The customer service is probably doing that every day, adding people's license plates to their accounts.
Yeah, and we have a prepaid also, so we don't have to worry about it, period. So thank you very much.
You just can't get a new car, Bert.
Yeah.
I don't think
your old license plate.
Car. We're hoping for the AV revolution to come around, where we just don't need a car on occasion. We do have it. I'm anxious to get into a Waymo as soon as possible.
Good luck on that, Bert.
Thank you. We'll move on to Director Grosbo for his next questions.
Thank you, and thank you, Joe, for this report. And I really am impressed by what you're thinking about doing here. And I guess for those of us who have been on here a while, I think David and Judy and Barbara and Jerry and I, it's hard to believe it was 2013, 9 years, but it seems to have worked pretty well. I guess one question I had is, one, I was a little taken back at how much revenue we do get in penalties. Do you have a sense as to what percentage of the penalties that have been paid by lower income people or persons of color? Is that something you're going to be gathering?
Good point.
At the present time, we do not have specific information on our customers, in that kind of demographic information on our customers. The relationship that we have is through the Department of Motor Vehicles with the license plate. So, in fact, there are some PII restrictions on the district as a business on the kind of information that it would gather. It can ask for information, I'm sure, at some point through the customers, say, that join Fast Track or something like that. But there is a limitation on that. Right now, all we get is the name, a license plate, and an address, so that we can follow up for billing purposes, and that's through the Department of Motor Vehicles.
Okay.
If I may, this is Dennis. I could add a little bit. There is a little bit of data out there. SPUR released a report in September of last year because BATA had to lurch into all electronic tolling without adequate planning because of the pandemic when they moved to toll collectors. And so the number of violation notices they mail out as a percentage of all their transactions is significantly higher than ours. They've had some challenges. So SPUR looked at data, and what they did is they looked at the zip codes, and then they looked at demographic data for the zip codes where violation notices were being mailed out. And for the BATA bridges, it indicated that there's some areas of concern where there's certain zip codes where a disproportionate number of violation notices were going out. And so that was another one of the data points that had us saying, that, perhaps it makes sense to have an adjudication process for people that are demonstrated low income. And that, arguably some of the folks that have toll violation penalty notices may also have unpaid parking tickets. So there may be other entities that we could partner with, such as, say, SFMTA, where they could take care of all of them at once. That would be better customer service. So once they go in, show whatever they need to show to say, look, I'm low income, and then it all goes away. So, just to give you a little of the thinking behind what we are kind of walking through in our heads as staff, and that we want to get your feedback on. But Spur did release a report that showed for the Bata bridges this was an issue, and so it seemed prudent for us to assume it may be an issue for us. They have data in our demographic or our geographic area, but it didn't appear to be as problematic as Bata's, but still it makes sense to consider an adjudication program.
Okay, thank you. Just one other question, and it's sort of related on the fourth page, where it talks about possibly imposing a cap of $100 or something. Would that be for a cap on everybody, or just a cap on low-income persons?
Of course, that is a policy direction that we would, if the board wants us to explore this idea and we bring something back, we could talk absolutely more about that. The intention in the beginning was just to do it for everybody. In other words, have a cap for anybody if they get up to a certain number of, up to a certain number of toll violations, and there would be a cap at, say, 10 or 20 or 50 or whatever we end up deciding on, but it would apply to all. And if you were low income, we would just be waiving it completely, waiving the toll penalties completely. So of course, if a low income person did not avail themselves to the waiver program, they would of course qualify for the cap program also, if we had both.
Got you. Okay. Well,
so
anyway,
the cap program helps everybody. One of the issues with the cap program is, the people that use bridges include corporate entities, and so you could have a company that has a fast track account with lots of, fleet of trucks, and so we do want to ensure timely payment, and so that's why if you wanted to pursue a cap, we'd have gradations of it, as Joe talked about, so that people pay their tolls in a timely fashion, because we do want to collect the tolls, and we don't want to create an incentive for people to only, basically mail a check once a year.
Yeah, understood. All right. Well, anyway, I also I really compliment the staff, Jennifer and Joe and the staff, and Dennis the whole, for this last 8 years of being customer friendly. It seems like it's worked. I've gotten comments from friends and others who appreciated not having to pay that penalty immediately. And what you've done is worked. So, and I would encourage you to come forward with some specific ideas on helping the low-income people and persons of color if we can. I know it's not that easy, but I applaud you for moving forward. So, thank you.
This is Director Parr.
Thank you, Director Parr. I was going to call on you next.
All right. All right. Don't think poorly of me after I make my statements here, you guys. So I've spent a lot of time in other areas talking about unintended consequences, and I think going to all electronic tolling, one of the unintended consequences probably is all of the penalty talk that we're talking about now. And I do appreciate the comprehensive report. I know that words are going around about how we make it equitable, and I do 100% agree with Dick that we need to have some ideas about that. But if you step back from this conversation and look at it as though you didn't understand tolls and didn't say anything about bridges, why in the world would anyone care whether they ever paid their tolls or not? I assume that when you renew your license, they can get you. I hope that's true, that we can recover that. But people that have 20, 30 toll violations, what incentive is it for them? They get a piece of paper in the mail, and we threaten them a little bit, and they go, yeah, I got to go across that bridge again tomorrow. Nobody's there checking to see if this is my car. Nobody's going to stop me. I'll get another piece of paper. Big deal. And so if word gets out that we don't enforce the tolls, I mean, the only reason that people pay now is because they're like we all are, and they're conscientious and good citizens. I'm not sure that any changes other than for people who are are in need of having us subsidize them. I'm not sure that anything we do with tolls is going to make a difference to get people to pay. But that's just me. I mean, it doesn't seem like there's a big incentive.
If I could offer two thoughts, this is Dennis. One is that California has a DMV hold. So if someone, just ignores it, once a year when they go to renew their vehicle registration, they'll be prohibited from renewing their vehicle registration until they've paid their tolls and penalties. So that's why there's some benefit to having a more streamlined process for low-income folks, and then a general process for caps, in addition to what we currently have. BATA's just been at this for a short period of time. They've had a lot of people showing up at their board meetings crying about, $6,000 bills, $9,000 bills. You haven't had that because of the programs we have in place, but we want to put additional programs. But having the DMV hold is very helpful. Not all states have that. Tolling agencies in other states are jealous of California toll agencies. But I would like to offer one other thing, kind of an encouraging note. Joe and I were talking about this yesterday. One of the things we learned when we went to all electronic tolling is most people want to pay their bill. People were reaching out to us when they drove through early on saying, how do I pay? And so there are some people.
We rely on
that.
We rely
we
on
do,
that.
But we're fortunate we have the DMV hold process so that we ultimately do collect, tolls from people. But the penalties are a way to incentivize those who can afford it to pay their toll in a timely fashion and not abuse the system.
All right. Are there any questions for any other directors?
Director Hernandez, make a comment, please.
Sure. Thank you, Director Hernandez. Go ahead.
Thank you. Thank you, Mr. Chair. Thank you for the report also. So I want to first express appreciation to the staff for the efforts to incorporate concerns for equity in introducing this policy for some further discussion and recommendations. And I'm pleased. I would like us as a district, I would like the diversity committee to take a little bit of credit for sort of for making sure that this that the concept of equity is front and center. And this is a result of some unfortunate events that happened in 2020, but committed effort on behalf of the district with the resolution to do better in the future. So thank you. I had a couple of questions to Joe. First, you talked about these two options, these two concepts that we're discussing today, the adjudicational process for economically disadvantaged customers. Could this option, this concept number one, be equated to a collection service? Is that what we're talking about with this? Joe, could you answer that?
Sure. No, I wouldn't use the term collections service, because collections tends to make people think of the guys with the concrete shoes. And that's absolutely not the point. What we were thinking more along the lines is what happens, for example, Dennis mentioned in the city and county of San Francisco, if you have a parking ticket, they have a process by which you can have, if you are low income, you can go in there and get that fines or fees or penalties that are put on top of your parking ticket reduced or waived. So we're looking at a program like that. So that we would like ideally to partner with another public entity, and they would have a process where a person applies, we would set up criteria, the district would set up its criteria saying this is the criteria, or we would adopt the criteria of another public entity if we found one that was appealing. And then a person would just prove that they qualify, and then they would apply to this adjudication process, and the process would waive their fees and clear up the penalty amounts, and then the person could pay just the toll amount and be done with it and go through.
Okay, thank you. That was concerning to me. It kind of rang to me of third party for profit entity that we would hire to make phone calls as you say, concrete shoes kind of folks. So I'm relieved that that's not what we're talking about here. Let's see. I feel like I just need to say that I'm on the other end of the spectrum in terms from Barbara, and I think we have to have faith in people that, you know, we want to do the right thing. Do you have some stat, Joe, as to what percentage of our, and if you've already noted that in the report or verbally here during the report, excuse me for not reading it or hearing it, do you have a stat on the number of folks that come through that do not pay versus those that do?
Yeah, we have some basic facts on that front. In the violation section, in the report we talk about, there's about 93% or so of our customers pay on time through one of those many channels that we talked about. The bulk of them, of course, being through the Fast Track program itself, but the other accounts or invoice or any number of things. And then we collect about 1.6% of our percent of our customers through the violation process. And then we have a certain number of them that we don't collect from, and that are still in the pipeline through that process. When it comes to sort of violation accounts in violation, we have the vast majority. I think it was like 80, almost 90% of the accounts that have a violation have either one or two. In other words, it's somebody who just gets one violation, or maybe they get two. When it comes to over, it's a small fraction, less than a percent that has what we would call, multiple violations, 10 or more, something like that. And then I think we looked at some data, and I can promise you that if we come back to set up, if you guys are interested in setting up a CAPS program, we'll come back with much more detail on this. We didn't want to overburden everybody, but we were looking at, I think there's only about 3,000 accounts that have ever gotten over 20 violations. So it comes down to a pretty small number, and we don't necessarily have data on this because of the way people sign up for accounts, but Dennis is correct that we do have a number of our multiple violation accounts are actually people who own, we think, potentially small businesses or larger businesses that have multiple vehicles, and they're all on one account. And so therefore they can rack up that many violations quickly.
Got it. That's helpful. And I do see that on the bottom of page 33. Thank you for that. And I think fleshing out that information would be good. But the takeaway for today, or at least for me at least, is that it's a very, very small number of folks that we're talking about. Now, you're identifying that unique group of customers possibly associated with small businesses. There might be ways that you could come up with some creative solutions, I imagine, to deal, if in fact that is really who makes up the bulk of that very small percentage. Unique solutions, maybe dealing with other business communities and associations on how to address that. So I encourage you to look for some creative solutions there, if in fact that's what we're looking at with that particular population. And I guess the only other thing I wanted to say was, you talked about the economic impact. We have $10 to $20 million brought in annually in penalties, and I think you said $2 to $4 million in potential costs to establish some type of program aligned with either number one or number two concept that you introduced today. I suppose there's a thought in my mind, and I just want to say this: is what does it mean about our philosophy that we are creating a dependence within our budget on monies coming in through penalties? To me, that seems like not necessarily a healthy way to look at funding for our organization. I don't know. I'm not sure I'm expressing that clearly, but it just seems not healthy to sort of incorporate a line item in your budget based on dependence on penalty. So, but Joe, I'm going to be reaching out to you for some discussion on some things. We can talk about that just between the two of us in more detail, and you can explain to me more about that philosophy. But thank you very much. Thank you, Mr. Chair.
Thank you. Is there anyone else who has any comments?
Yes, this is Director Giudice up in Roanoke Park.
Go ahead.
Hi, and I apologize for the late delay. And just as a background, I'm one of those guys that doesn't have a fast track, and I cross the bridge semi-frequently to go to North Beach, etc. I get my little bill in the mail, and I pay it promptly with a check. I'm old school. But having said that, obviously, and I am naive and new, and this is my first meeting, and of this committee, and I apologize. But there is certainly some mechanism, obviously, at the toll booths that collects, the information, the license plates, as these repeat offenders, as it were, cross the bridge. So, is there any outreach to these small companies that as soon as there's another crossing of that bridge, that we directly contact that organization or those business owners to see if there's something that we can work out? I mean, I definitely want to have an eye toward equity, and I certainly am compassionate for disadvantaged, communities, especially people living, below the poverty line, et cetera. But I'm just wondering what does the outreach look like for that, small group of people that seem to be creating the majority of the issue?
This is Joe Wine response. In our present time, we do not have a program to reach out to particular customers, but it is we have a reactionary process in place here in the Bay Area where it's when a customer reaches to us, then we work with them at that point. And we can work with them in many, many different ways once they've contacted us, but at least presently we don't do that. But that could be something that part of this conversation could come out of this conversation, and just look at the various ways of dealing with that situation of programs with people who have large amounts of violations.
Yeah, I think maybe, very economically, maybe we could pick up, the bulk of or a lot of that low-hanging fruit there. If they are businesses who are simply having multiple vehicles cross the bridge continuously and are in the rears, maybe reaching out to them and saying, hey, look, it's time to pay the bridge toll. That might bear some fruit. So.
Great. Thank you very much. Anyone else have any questions, comments, concerns for Joe?
This is Director Hill again. Quick question.
Go ahead, please.
Yeah. How many incidents do you have of no license plate, hidden license, or stolen?
I don't have the specific information on me right now on those. It is something that occurs. It's a fraction of a percent, but we can absolutely provide that to you at another meeting.
I think you give you enough for what I'm interested in. It's just a very small percentage. Thanks.
Yep. Okay.
Great. If I could just, Joe, I know that all revenue and all expenditures are tracked, and all of that means that all of them are within a line item on a budget. But do we anticipate certain revenues to offset other costs through penalties, or do we always only look at what we would anticipate to collect in tolls? Getting back to, I think, Director Hernandez's point, because I agree that we should not, in the ideal world, every 100% of the people would pay a toll, and that's what we should anticipate as revenue. Obviously, there's the penalty side of things, but there's also the expenditure for the additional cost to collect those tolls that are late in coming. But can you just expand upon that and how we look at that?
Sure. Yeah. So you're getting at personal, district philosophy, personal philosophy. So when we bring the budget to you, the budget is built on the assumption that we'll collect 100% of the toll revenue. Period. That's it. And but as I mentioned earlier, the way we achieve that is by making the second assumption, and the second assumption is that if for some reason we don't collect a toll from an individual, a series of other individuals who end up paying us some form of a late fee will make up for that missing toll. And so that creates that makes that 100% assumption correct. And we started that back in 2013. This is sort of, and we had some discussion way back when about that, saying we are only going to assume we collect 100% of the toll. And it's been, as I mentioned, it's been financially, that philosophy has worked out every year. Occasionally we get a little more than the missing toll revenue. And of course that's plowed back into transit service and bus service and in ferry service and or in the reserves. So that's where it would go. But it has worked out. For example, if we didn't make that second assumption, we would be only be able to budget for what we think is collectible, and collectible historically now is less than 100%.
Gotcha. And I appreciate that, and I really do. And do we have any other? What I'm hearing in option one, which is really on the economically disadvantaged, is really a means-based approach, right? Do we have within our fares for bus or ferry? And because I know this is also a big subject of conversation in all transit agencies and through MTC and elsewhere. There's pilot programs in place now, and I know that some of that has to do with individuals having to state or prove that they are of the income category they say they are. Do we have anything in place within the district? And I should know this, and I apologize.
We do. We were one of the charter supporter sponsor members of the START program, which is a needs-based fare program for transit. So we use that both in bus and ferry system.
And do you think, I guess what it seems like that first option would take that kind of approach and just expand it to toll customers, and then once we have that universe, now we've taken care of those that are economically disadvantaged and have a means-based approach going forward. Correct?
The idea is to do that as it applies in the tolling structure to the penalties, is to have a needs-based approach to penalties, but not as a reduction, but just as a waiver. In other words, we wouldn't just reduce the penalty amount, we would just waive it. That's the concept in front of you. Of course, the board could consider reducing or waiving, or those are all policy options that would, when we actually form a program, could be considered.
Yeah,
so that's a good example, Director Abbott. This is Dennis. So for the Clipper Start, as Joe said, we're one of the inaugural members, but we don't keep the data. We're not the agency that says who passes the means test. It's a regional approach. And ideally for toll penalties, it would be similar. At this juncture, there is nobody that does this. So we would want to partner with some other entity, whether it's folks MTC uses for the Clipper Start program or one of the counties for how they waive parking tickets. We would want to partner with somebody else so we're not dealing with the personally identifiable information. We want to build on existing infrastructure, and we want to make it so they take care of this transaction, waiving toll penalties, when they take care of other transactions for transportation, whether it's parking or transit fares. That is, if the general direction from the group was to have us explore this further. Those are the kinds of things we would look at: is what would the rules be, who would we partner with?
Exactly, and that kind of goes to my point, where is that ready to hatch yet, or are we still kind of in that process? Because the smart Clipper program is really, still underway, the pilot stage, as it were. A lot of entities out there, and it's been growing. That's great, but I'm not sure if the district needs to get into the business of checking payroll stubs and/or tax returns. That should be done.
No, we don't want to get in that business. We do not want to get in it. We want to partner. The question for the committee is, do you want us to explore this further? And if the answer is yes, then we'll come back at a future meeting with specifics about a program in terms of who potential partners are and some suggestions for the criteria for the adjudication process. And if you also wanted us to explore the cap, we would do that also. And staff recommends that you direct us to explore both. And if you do, we'll come back at future meetings with all the details and concepts for approval. Today is just for discussion.
Yeah, no, and I appreciate that. And for me personally, I am supportive of staff investigating both. I don't think the first option is quite ready for live time yet, but I think it will over the course of time going forward. And I think that, again, I am thankful that we have the years of experience, that we really took that approach from the beginning, that we have customers, and that we have flexibility in that. And I can tell you again, sitting through those meetings over at BATA, it's not the same. And I know some of that has to do with our demographics, and I'm not saying that we have a smaller percentage overall, I would imagine, but we still have those folks that are struggling and that we need to reach out to. I think that what's true in all policy, there's always unintended consequences, but what you try to do is minimize it to the greatest extent possible, going in with eyes wide open and really being thorough in the analysis and data collected in the program, and then even then have it be iterative and adapt as we go. But I do appreciate the discussion today, and I think it's timely. And I think that I'll look to my colleagues, but if we can just have consensus and having staff move forward, looking at both those options, knowing that one may be available more so than the other, but also being appreciative of the flexibility to not have those folks that have thousands of dollars worth of violations come forward at each and every, as is the case elsewhere.
I agree with that. I need to make a motion, or I just say I agree with the consensus.
I do too.
I think it's just a discussion item. So if we're all,
I concur. Yes,
I agree.
Yeah, Director Rabbit, Director Terrio, I agree also. I would, just as you, like to hear more about the practical aspects of means testing, if that is ultimately be a part of the program.
Yeah, great. Perfect. Joe and Dennis, do you have what you need, or do you need anything anything more specific?
This was great.
I think that's sufficient.
Chair Rabbit, this is Madeline Chun. Perhaps we should also invite any public comment on this issue before we close this out.
Yeah, thank you. And I will. I just want to make sure that if there's, as we sit here right now, that staff is satisfied with the direction and the discussion. Hearing no
yes,
no word contrary, I'll go ahead and ask the secretary if there's anyone from the public who'd like to speak on this item.
There is. We have one speaker on this item. In a second, I'm going to have him join the call. We have David Pilpel today, and I believe he's patiently waiting to submit his public comment. Hang on one second.
Great.
David, are you there still?
I am, patiently.
Perfect. Thank you very much. Go ahead.
Great, thanks. David Pilpel. So I have some hopefully thoughtful comments. I hope staff are taking notes. I can put this in the form of a letter to follow up if that helps. So a good report and discussion. I agree that toll revenues, prompt payment, and resolution are important. I don't think that tolls themselves should be waived unless it's a stolen vehicle or some other circumstance requires. I think that tolls should cover bridge operations and transit subsidy, but penalties should cover the costs of the penalties, that there shouldn't be a cross subsidy there. So I would try to isolate or allocate staff, customer service center, and contractor or vendor costs related to the whole penalties side of things, and again, cover those with penalties. That might mean shifting some bridge revenues from penalties as a source to basic tolls as a source. I forget where we are in the 5-year toll increase cycle. Is another increase already approved for July 1, or is this the year to go out and do a whole process on the toll increase cycle? I just don't remember. If adjusting the toll and penalty schedules requires, or if adjusting them further requires a public hearing, then I would set one soon. In my view, chasing a penalty shouldn't cost more than the penalty itself, like spending $100 in staff time chasing down a $70 penalty doesn't seem to make a whole lot of sense. Could staff have more discretion to set up payment plans or waive or reduce penalties? Or do they have enough discretion now to do so? And what would be the cost or implications of that additional discretion? I have no objection to the staff proposal. Otherwise, I'm actually intrigued by the third-party entity idea and cooperating with other jurisdictions on solving parking and penalty and vehicle related issues. Anyway, I hope those thoughts are helpful. I did put some time into thinking that through. Anyway, thanks for listening.
Thank you, David. I think that actually is very helpful. So thank you for that. Anyone else, Madam Secretary?
We have no other speakers for this item.
Okay, well, I think, thank you all very much. No actions obviously required for this item as it was presented for discussion, staff direction only. So staff will bring this back to the committee for discussion and possible action of any proposed changes at a future meeting. With that, we'll move on to item number 8, which is the status report on the fiscal year 21-22 budget. Staff report starts on page 35, and Joe will also present this report. So Joe, go ahead, please.
Thank you for the chair and the committee. This is your monthly status report on the current budget. It has not. We've gone through 6 months, and the report itself is not basically has not changed very much from the one you saw last month. So I will just mention that what we do is we update it for the actual expenditures, actual revenue collection that occurred in bus and the ferry and transit divisions, and that's on your chart on page 37. The tables and graphs have been updated to represent that too. Overall, the budget, of course, remains balanced. We are using approximately $66 million in federal subsidies in order to do so, to balance that budget. And that has not dramatically changed from the last time we looked at this report. So I'm happy to answer any questions on any of the on the table itself or on the attached charts.
Great, thanks, Joe. Are there any questions, comments, concerns on this item?
Director Maston, I have a question.
Please go ahead.
Yeah. Joe, the charts on page 40 and 41, the projected recovery rates versus the actual rates, those numbers have rarely come close to each other in most cases. And I was just wondering if the projected recovery rate was going to be revised.
We did last year, as you remember, as an institution, we decided that they got off so far off whack that we did revise them and come back to look at that differently. So that's definitely something that we could do. We were going to wait through a quarter this year and take a look at it. So given your question, we're about at that time to look at that. So staff will look at that and come back to you. Also, I'm open to the board's direction. If the board wants us to update those, we can definitely do that. But we will examine it either way.
Great, thank you on that. Anyone else have anything for Joe? Madam Secretary, is there anyone from the public who'd like to speak on this particular item?
Yes, we do. Mr. Pilpel would like to speak on this item as well. So give me a second and we're going to connect him again.
Great.
David, are you still with us?
Yep. Can you hear me okay?
We can hear you. Go ahead.
Great. So on the PEPRA issue that's been kicking around for several months, I think the first tranche of the ARP money has been received by the district and is hopefully in the bank somewhere, but not the second tranche. Is that correct? And by when does that second tranche of the ARP money need to be received in order to avoid dipping into operating reserve or other reserve funds? Next, my favorite chart on page 3 of the staff report, page 37 of the packet, can that be, where are my notes here? Can that have a line added sort of at the bottom to capture the portion of the second tranche of the ARP money that's proposed to carry over to fiscal 22-23, which I think would be from the double asterisk at the bottom, 43.8 million minus the 20.5 that's on line 2. So that would be, what does that work to? 22 point something, 23.3 million, something like that. Anyway, that I believe is currently programmed to carry over to 22-23. And finally, the recovery charts starting on page 5 of the staff report, page 39 of the packet, are very helpful in understanding where we are with recovery revenue trends. So thank you for including that every month. Thanks for listening.
Thank you, David. I'll turn to Joe and ask about that first tranche and then how we report what essentially would be fund carryover into the next fiscal year.
Yes, the first tranche has been received, and permission to receive it all. We have not reimbursed, the district has not reimbursed itself all for it because it hasn't spent it all yet. The second tranche, we now have full permission. It's been cleared. We will be able to receive the second tranche, and we will be billing for it, of course, when we have expenses, and we have not got to that part. And we're expecting that at near the last couple of months of this fiscal year. So that would be, April, May, June. And the exact time we do not know at this point. It depends on the district's expenditure rate as it goes forward. As to the second thing, the double asterisks on page that was mentioned on the chart on page 30, that's at 37. There, we've been just writing down the amount that's carried over because, of course, every time we update the chart for the actual revenue, that number changes. So, it's in the second, sort of at the end of that first line on the double asterisk, says 23.329822 would be carried over to the next year. And that's how we've been displaying it for at this time.
No, I appreciate that. I think that I'm used to we have lots of sinking funds and different funds that get carried over and fund balance reported out. And just because it's a line item doesn't mean it's spent in that particular year. I appreciate that. So thank you all. No action is required for this item. So moving on then to item number 9, we have the monthly review of the Golden Gate Bridge traffic tolls and bus and ferry transit patronage fares. And that's on page 45. Again, Joe Wire will present this item as well as 10A, which is the monthly statement of revenue and expenses. That's on page 63. And 10B, monthly statement of capital programs and expenditures, and that's on page 81. So Joe, can you go ahead, please?
Yes, thank you very much to the chair and the committee. These reports do look a little different than normal. There's 2 months here, of course, and I know it's a little more confusing, and that's because December's meeting comes a little early, and we were not able to get these financial numbers to you due to the winter end of year, Christmas, New Year's holidays. So you have both November and December in front of you. And, we'll just skip to December, which would be page 53 of this report. So if you kind of page down to that, to page 53, it's the usual chart. And as we do try to do we've been doing a lot more often lately, but it used to be every quarter we'd take a look at this. And so since we went through the first 2 months, what this table does on page 3 is it lists the granular detail about passengers and revenues. Patrons, passengers on the left, and revenues on the right. And looking at the column that's to the far right, that compares what we put in our budgeted for revenues and our actual in our budget compared to what we're actually getting. And if you see in the top right-hand corner box, that's bridge. So each one of those numbers for the first 6 months is above. So that means we're getting more revenues than we budgeted. And that's because the crossings across the bridge are higher than what we had originally estimated. It's summarized for the first 6 months, about 13% more revenue than we expected. That carries, if you look down at the next box, you have it going down that same column on the far right-hand side, down to the second box. That's the bus revenue. And it's a little lower than what we originally had projected. And you notice there's a little bit of anomaly there. The number of passengers is doing well, but the number of a little lower than what we expected, better than last year. And what we're seeing, some of that is the lower revenues are due to the fact that we are also, the makeup of our passengers is a different makeup than it used to be. In other words, the amount of fares they pay. We used to run a lot more commute service, which was a higher revenue per passenger than some of the regional service that we're running today, which is usually often lower revenue per passenger. And then at the bottom box, you got ferry, and the ferry revenues and passengers are up considerably from last year. And at approximately 16.9%, the revenues are up from what we had budgeted. The important point that actually was pointed out by Director Gabarino earlier about the start is about the Smart Train, is that you're comparing now COVID to COVID. So this is one COVID year to another COVID year, and this COVID year is better than last COVID year. What we have included down on page 59, 60, and 61, we have included 3 graphs, and that's comparing the 2 COVID years to the original, to our last non-COVID year. And that's an important stake for us because it gets us to understand, the recovery. So if you turn to page 59, and I think these charts we'll continue at least every quarter, if not every month, to include. That first page on page 59 is the bridge. The top graph is traffic, the bottom graph is revenue, and there you can see the bottom line, the red line, is the first COVID year, that's last year. The next line up, the green line, is the second COVID year, this year. And then the top line, the blue line, is revenues for the last non-COVID year, or 3 years ago. And you can see that, yes, this year is better than last year, but it's worse than the year before. And that's what story you've been hearing. It's been that way. It's been pretty consistent. You can see that green line in the middle is relatively horizontal. It's dropping a little in the winter, which it would have done even without the variant that, Omicron that came through. But of course, that's made things a little bit worse, but it would have dropped anyway, because as you can see, the blue line at the top, which had no COVID, it drops in the winter. And that's just the normal course of business here for the district. If you turn to page 60 and 61, we repeat those two, first for the bus system and then for the ferry system. Again, on the bus page, which is page 60, the second graph down, that's the revenues again, and you can see that both the 2 COVID years are a fraction of what we used to be prior to COVID, and we're all aware of that. But of course, the green line, or the middle line, is slightly above the previous year, so we are up a little bit. Again, very horizontal. We saw growth coming into about summer, and then it's flattened out, and then there's a little tail off at the end, and that could both be from winter, holidays. It could also be the variant. It's really hard to tell exactly at this point why that's occurred, but it's not unusual. As you can see, the blue line dips quite a bit, even pre-COVID. Lastly, on page 61, you have the ferry system. Again, revenues and passengers, revenues at the bottom. You can see ferry is the most cyclical of all of our businesses. It's clearly that comes both from traffic, but also from baseball. Baseball is a summer, used to be summer, now it's kind of a little spring and fall summer business, but so it bumps up the passengers in the summer even more than just the Sausalito service does, which also rises quite a bit in the summer. But you can see that the middle line, the green line, is up over last year. We're doing considerably better than last year, but a long way from what we used to do as far as revenues and passengers are concerned. Any questions on those reports? If not, we would turn to page 63, which is the financials. And you can always ask questions at the end. Page 63, again, we have 2 reports, both November and December. So I think taking a look at page 64, where we summarize December on page 64. So I'll page down to that one. And their revenues, if you look straight out at those numbers on the table, you can see that the first group of numbers is revenues, second is expenses, and the last one is revenues over expenses. And the top line of the revenues over expenses is 2.799.8 million. What that means is essentially revenues are almost $3 million over expenses, which is great. On good or bad, that includes almost $20 million in federal bailout funds. So our operating businesses, what we need to live on once these funds, these federal funds are run out, our operating business was $16.7 million in deficit. So we're still running a monthly deficit, as I know you're aware from our constant reports. It is, as I said, almost $17 million so far through the first 6 months. That's considerably better than last year at this time. So it's definitely our situation has improved, but it is not a situation we could exist in without these federal revenues. And we're obviously keeping an eye on that, and we'll be considering to discuss that as we consistently discussing as we go forward. We clearly also have not seen the end of the COVID situation, so we don't know. We're not necessarily back to the new normal, whatever that may be. There's the line item data for the division starts on page 73, quite for this month, if there's any consideration, any questions on that. Otherwise, we'll take one last look at the last report, look at the last report on page 81. That would be the capital information. Again, this report covers 2 periods, both November and December. So if we look at page 82, the summary is for December. And through December, the expenditures are roughly about 39% of what we budgeted. If it was spot on, it'd be 50, but that would be very surprising that we would be in that situation given the variable nature of capital expenditure. So 39% is excellent. It's most of these projects are spending along as we expected them to. And the details for that is on page 87. And with that, I would stop for any questions on these last reports, 9 or 10A or 10B.
Great, thank you, Joe. Does anyone have any questions of Joe on those 3 items? Not hearing any, I'll ask Madam Secretary if there's anyone from the public who'd like to speak on these.
We have no speakers on this, but what I'll do is, since we kind of went long at the end at public comment, I'll try to poll just in case someone's still on the line and wants to speak.
That's great. Appreciate that. And Joe, I want to just say thank you for the work, obviously, but thank you for those charts that compare the 2 COVID years with the pre-COVID time period, especially now that we're in the second COVID year. It only makes sense to remember where we were and where we want to get to at one point in the future. So thank you for that, and thank you for all the work. So no actions are required for these items. So we'll continue to item 11, which is the second quarterly report of judgments and settled claims. The report can be found on page 91, and Attorney Madeline Chun will present this report. Madeline, go ahead.
Yes, pleased to report on this item, which is actually something that Kelly Vitale has prepared. And this is a quarterly report on claims and settlements. Basically, they involve workers' compensation claims, and there were a few property damage claims, all of which were either previously reviewed by the Finance Committee or were settled within the authority of the General Manager. And thanks to Kelly Vitale's fine work, the workers' comp claims also include resolution of all future medical claims. So if there's any questions, be happy to field them or to ask for Kelly's assistance.
Thank you, Madeline. I think we all concur and say thank you to Kelly for the great work as well. My colleagues, any questions on this particular item?
David, I have an inquiry of
Please
Kelly.
go ahead.
Is Kelly on the line?
Yes, I'm
Yes,
here.
she is. Yes, she is.
Kelly, now when we have one of these worker comp claims, do we estimate the amount we think claim's going to run, and we put that away, put that aside for future use?
So generally speaking, with the report that's in front of you, those cases are resolved, and that resolution includes the estimated cost of their future medical needs as indicated by their doctor with a present value savings because we're paying it ahead. So does that answer your question?
Well, yeah, but we put funds aside to cover that when they make their claim, correct?
Well,
Yeah,
so
this is Joe Wire. Let me.
Oh, go ahead.
Yeah, why don't I jump in on that? The district is required and does have a liability reserve for workers' comp claims.
Right.
And then Kelly can go into the details of how it says, but the information comes over from our third-party vendor, and we have an actuary that looks at it every other year and produces a report that then in your audited financial statements, we include as part of your liability reserves the amounts to cover what we understand, what the actuary projects we're going to have to spend on workers' comp claims and other types of claims all across the district.
What my concern is we're not taking this out of our general operating funds. It's out of a reserve out there that these monies are coming from. Is that correct?
That's correct. There is a reserve set aside for the workers' compensation payments and claims. You are correct. There is and that's why we have the actuary report, because it measures up what our administrator is setting aside in the reserves every time a claim is reported. So they estimate the probable exposure for the case, and then the actuary comes in and looks at that on a biannual or every other year, and then we true up the two. And every year I report those reserves to the state of California because we are self-insured. And Cody and Joe then set aside, based on the confidence level that we have for that year, the amount of reserves we think it's going to take to pay out our claims. Does that answer?
Yeah. Oh, yeah. Yeah. No, I
Okay.
just wanted to clear up my mind that,
Sure.
I know I asked that some time ago, but I wanted to make sure that and the other members of our board understand that. Okay. Thank you.
Sure. No problem.
Thank you, Jerry, for that. Anyone else have any questions, comments, or concerns on item number 11? And I know we're going to have public comment here in a bit, so we'll take any public comment on item number 11 at that time. So that concludes the discussion. No actions required for item 11. So we'll move on to items 12 and 13. That's the second quarterly report on authorized budget adjustments and the budget transfers under the general manager's authority, as well as the procurement actions. Item 12 starts on page 93, and item 13 starts on page 97 of the packet. And Joe, can you go ahead and just give us a brief explanation of those?
Yes, happy to do so. As mentioned, the budget adjustment item on page 93, there's a summary chart on page 94 that summarizes the activity that's occurred, and all these changes occurred at the board level because they apply to the capital budgeting process. And there's a net of about a $600,000 increase in expected expenditures on the capital budget. And then the second report page 13, report item number 13 is on page 97, and the activity there in the procurement report just shows we have relatively consistent activity from the first quarter to the second quarter, and then the details for all the various transactions that occurred on the second quarter are in the attached report, and happy to answer any questions.
Great, thank you very much. Any questions for Joe on 12 or 13? Not hearing any. That concludes discussion on this item. Again, no actions are required for 12 or 13. But before we move on, I guess let's see if there's anyone from the public wishing to speak. And I'll also include, I guess, item 11 and look to our secretary.
Got it. I'm going to pull the public line just one more time just to make sure somebody's still on the line and wants to speak and we didn't miss them. So we'll pull for 11, 12, 13, and 14. So give me 1 second.
Perfect. Thank you for that.
Thank you, Chair Rabbit, for that second. We do have two speakers that we'd like to introduce, and we're going to call on Shane Weinstein first.
Great.
All right. Let's see.
Can you hear me?
We can hear you. Thank you. Hi, Shane.
Okay. Good morning. Good morning, Chair Parr, Director Shane Weinstein, President of the ATU. I called in to give you some numbers this morning. The district and the ATU are about $165,000 from the deal here, and that's the difference between 3% and 4%. The district didn't bat an eye last month when choosing to spend $1.2 million annually on managers that at this point, many are not needed in these areas. So directors, we've lost 60 operators since September of 2020, and tomorrow we gain our first. Just recently, for the next class, the bridge processed 81 applications, 22 people were invited to test, 12 showed up to the test, 6 passed and were invited to the interview, and 4 people are in the next class. That starts in February and ending in May or June. How does this operation continue to run? It doesn't. By the bus leadership's own words, if the commute service returned, we could not staff it. Now the drivers who are left and who are loyal to this agency are taking on all of that extra work, and they're broken. 60 of 195 drivers have contracted COVID. I'm currently positive from contracting it from one of my members. This job's dangerous. It's taxing mentally and physically. My members are getting spit on and assaulted at a rate that this place has never seen before. So as we discuss value, this is the best 1% or $165,000 a year you could ever spend. Samtrans and VTA both signed deals with multiple 4-year raises annually, and both gave $3,500 plus for appreciation bonuses. What's the district doing to keep my members here and entice more than 4 to come? I was told that we can't give the bus operators 4% because the district would then in turn need to give the coalition the same. And although I understand that logic, that does nothing to make my members feel appreciated. So for those directors on this committee and the Labor Advisory Committee, I please ask you to entertain the idea of giving these operators a 4% raise. Again, we're only talking about $165,000 annually here. Thank you for your time.
Thank you. Our next speaker is David Pilpel. David, are you still on the line?
I am.
Thank you. Go ahead.
Okay, so last time today. So just looking at items 12 and 13, just thinking about the levels of delegated authority. I don't have any particular issue with those right now. And I think that those are set either in law, board rules, or district policy. But I'm just kind of wondering out loud the next time those rules or policies are reviewed, maybe in the master ordinance, maybe in the board rules, I forget, just to confirm that the levels of delegated authority are still appropriate given inflation and other factors. So if it's 100,000 for certain things, perhaps raising that to 105 or 125 or something might make sense. I mean, there's kind of a line between what authority the general manager and staff have to initiate or approve contract change orders or small contracts versus things that have to come to the board. And I don't know the right answer, but I think sort of just reviewing and fine tuning that to be sure that you're seeing the things that make sense for you to see and not seeing things that are appropriate for staff to handle should just be reviewed periodically. That's my thought. Thanks for listening.
And that
Thank you,
concludes
Madam
our public comment.
Okay, thank you so much. Thank you to Shane, and stay safe, be well, and David, thank you for your thoughtful comments as well. With that, we have reached the end of the agenda. May I have a motion to adjourn this meeting?
So moved.
And I'll second
motion.
it.
We have a second. And is there any objection? Hearing none, this concludes the meeting of the Finance-Auditing Committee. Everyone, the time is 11:34.